Hey guys, it's GeoCrypto back with a new video, and today we'll be taking a look at how charts work with a new series I'm starting explaining the basics of trading. After we have spoken about enough of the basic stuff, we'll start delving deeper into the world of trading to also discuss more advanced techniques and strategies. First of all, you need a charting site. Now the one I personally use and advise is TradingView. I'll place a link in the description which you can use to set up an account and start charting for yourself. Now the basic version of TradingView is completely free to use, so there's no upfront cost to get started, and if you decide to upgrade to the Pro version, you're able to get more advanced settings and custom timeframes. I will advise you, however, to start off by using the free version and getting familiar with trading and the platform before deciding if upgrading to the Pro version is worth it for you. After you have made an account, go to the top search bar and enter the asset you want to see and start charting for. Now for this example, I'll be using the chart of Bitcoin against the US dollar. Then click See More Advanced Chart to enter the web trader. Now, for this example, I will set the chart to the 1 hour time frame. You can select this right here in the top of the chart, and the time frames range from minutes all the way up to days or even weeks or even months. Now I do recommend you to not go below the 15-minute time frame, as this gives you the time to properly analyze the chart you are looking for before having to make a decision or the chart being completely different from when your analysis started. Now this first part of the series will cover support and resistance lines or zones, as a support or resistance is never one price point, but rather a range in price where the asset has a hard time breaking above or below. Now let's take a look at the chart of Bitcoin. Here we can see, right here, at the start of December, Bitcoin crashed down from about $58,000 or $56,000 all the way down right here to a low of around $40,000. And after this, the price started to rise again and hit a resistance of around $50,000 to $52,000. So now right here, we have discovered a resistance zone and can keep this in mind for the future. Price then starts going down to around $45,000, where we reach a support zone. This has acted on 1, 2, 3 occasions as a support which the price was unable to break down. So after the price has failed to break down through this point of $45,000, it might be a good place to enter a long, as in doing so, you minimize the downside risk while having the highest possible reward. If you were to buy at this support zone and held it until reaching the previously identified resistance zone at 52K, you would have made a nice 11% gain, or even all the way to the top, like right here, 13% gain. Now, let's look at what happens when price reaches the resistance zone we had previously identified. As you can see, right here, the price spikes up from 45K, and once it hits the zone, it slows down and fails to break through. The price kept moving around this price for about 4 days without being able to break through the zone. This could be a good place to go short, as you can put your stop loss just above the resistance zone. I can show you an example. Say you go short, I don't know, right here. Then you can put your stop loss just above the resistance zone and putting your take profit at the previous support zone. Now as you can see, you'd risk around 3% while being able to gain around 10%. Basically risking 1 to gain 3, or as the indicator here shows, 3.35. 34, sorry. Now the great thing is, you don't have to be right all the time. If you win half of your trades with a risk reward of 1 to 3, you would already be making some serious profits. Now the support and resistance zones work because this is a price where a lot of people think the stock is a good buying or selling opportunity. And once you have identified these zones, you can use them to predict where the price will likely bounce in the future. These zones are not meant to be used on their own for trading, but rather to get an idea of where you can enter a trade or where your stop loss and take profits might be placed best. So, I hope this quick tutorial has given you a general idea of how support and resistance zones work, and I would advise you to start using TradingView and trying it out on your own. If you enjoyed the video, make sure to leave a like and subscribe to the channel. Thanks for watching guys, and I'll see you in the next video.